The XRP, often overshadowed by Bitcoin and Ethereum, is a unique player in the cryptocurrency landscape. Developed by Ripple Labs in 2012, it was created to enhance cross-border payments and reduce processing times. Unlike many cryptocurrencies that rely on blockchain mining, XRP uses a consensus protocol to validate transactions, significantly speeding up processing time. XRP acts as a bridge currency in financial transactions, completing them in seconds, a stark contrast to traditional banking systems. This utility has seen it adopted by financial institutions, indicating growing trust and utility in the broader financial landscape. By making these processes faster and more cost-effective, XRP offers a tangible solution to real-world problems, positioning it as a staple in the future of financial transactions. Understanding XRP's position in the cryptocurrency world requires a look at its market dynamics and its role within the broader digital currency ecosystem. XRP ranks among the top cryptocurrencies in terms of market capitalization, reflecting investor confidence and perceived stability. XRP's integration into payment systems and partnerships with banks highlight its practical applications, not just as a speculative asset. These partnerships reflect a level of institutional acceptance not commonly seen with many other cryptocurrencies. The protocol's consensus mechanism allows for faster transaction times and scalability that many other cryptocurrencies struggle to match. This technical edge contributes to its resilience in the crypto market, where technological efficacy can directly influence investor confidence. The currency's design, emphasizing transactional utility over mere value storage, positions it uniquely among its peers. When considering long-term investments, stability is key, and XRP showcases unique characteristics that contribute to its stability in the volatile cryptocurrency market. One of the main factors is its low transaction costs, which remain consistent even as the network scales. The controlled release of XRP tokens by Ripple Labs helps manage inflation and deflation, adding a layer of security for investors. Unlike cryptocurrencies influenced by mining power, XRP's release is predetermined and transparent, ensuring a steady flow into the market. Ripple Labs has actively engaged with regulators to ensure compliance, enhancing investor confidence in XRP's longevity. The growing acceptance of XRP in mainstream financial transactions underscores its stability and potential to maintain or increase in value over time. This operational adoption underlines the confidence in XRP's stability, making it an attractive option for long-term investment. The market trends impacting XRP provide insight into its potential growth trajectories. The increasing demand for faster and more efficient cross-border payment solutions is a major market driver for XRP. As globalization increases, the need for an efficient, reliable, and cost-effective transactional medium like XRP grows. Cryptocurrency adoption trends also influence XRP's market position, with more people and businesses embracing cryptocurrencies for various uses. The competitive landscape of the cryptocurrency market drives continuous improvement and innovation at Ripple Labs. This competition motivates the XRP community and developers to enhance the system's capabilities and ensure it remains relevant. XRP, with its strong institutional ties and practical use cases, is well positioned to navigate these complex dynamics, enhancing its appeal as a long-term investment. Investing in XRP for the long haul requires thoughtful strategies that align with the unique attributes of cryptocurrencies. One effective approach is to capitalize on XRP's potential as a bridge currency in international finance. Investors can focus on the growing adoption of XRP among financial institutions, which could drive its demand and value. Keeping an eye on Ripple Labs partnerships and their developments can provide critical insights into XRP's future trajectory. The speed and scalability of XRP transactions make it a practical choice for real-world applications. Investors looking to benefit from utility-driven growth might find XRP a suitable candidate. Focusing on fundamentals like transaction volume growth, regulatory developments, and technological advancements can be a more grounded investment strategy. Understanding the broader financial ecosystem's evolution, including digital payments and fintech innovations, can help investors anticipate how these factors might impact XRP's utility and value. Dollar cost averaging, or DCA, is a strategy that can be particularly effective with volatile investments like cryptocurrencies. It involves regularly buying a fixed dollar amount of a particular investment, regardless of the share price. Over time, this strategy can help reduce the impact of volatility on the overall purchase. For XRP, this means investors can potentially smooth out the price fluctuations common in the cryptocurrency markets. Applying DCA to XRP investments allows investors to build their position gradually. This method can be appealing for those who believe in the long-term potential of XRP but are cautious about market timing. By spreading out purchases, investors can avoid the pitfalls of trying to time the market. This strategy encourages a disciplined investment approach, reducing the emotional component often associated with investing. Incorporating XRP into a diversified investment portfolio can offer several benefits, enhancing portfolio balance and potential for risk management. Cryptocurrencies, including XRP, are known for their high volatility, but also for their high potential returns. By adding XRP to a portfolio, investors can expose themselves to the growth potential of digital currencies, while potentially offsetting risks associated with traditional investments. XRP stands out due to its utility in real-world financial transactions, providing a degree of insulation against market volatility. Its adoption by financial institutions for cross-border payments underscores its practical value. The unique aspects of XRP, such as its consensus ledger and absence of mining, offer a different risk and return profile from other cryptocurrencies. Keeping a diversified portfolio allows investors to benefit from these developments while managing potential negative impacts from other investment areas. Timing the market, particularly in the volatile world of cryptocurrencies, is notoriously challenging but can be rewarding for those who get it right. For XRP investors, understanding the cycles in cryptocurrency markets can help in making strategic entry and exit decisions. Observing patterns related to major announcements or technological upgrades within the XRP ecosystem can provide clues about potential price movements. Investors might consider buying into XRP during periods of negative sentiment when prices are lower, anticipating growth as market conditions improve. Conversely, selling during high optimism can be wise if investors believe the market has reached a temporary peak. This strategy requires a deep understanding of market indicators and sentiment. Instead of trying to time the market perfectly, combining this approach with dollar-cost averaging might buffer some of the risks. Staying informed about broader economic conditions that affect the crypto market can also aid investors in making better timing decisions. Investing in XRP, like any cryptocurrency, comes with a set of risks that must be carefully considered. One of the primary risks is market volatility, which can offer opportunities for high returns, but also poses a significant risk of loss. Regulatory risk is another important consideration, as the legal landscape for cryptocurrencies is still evolving. Future regulations could positively or negatively impact XRP. Staying updated with regulatory developments is crucial for managing this risk. The risk of technological obsolescence is non-negligible in the fast-evolving tech landscape of cryptocurrencies. While XRP is currently at the forefront, new advancements by competitors could diminish its relevance. Investors must also consider the concentration risk. A significant investment in XRP should be balanced with investments in other asset classes to manage exposure. Understanding these risks and how they can be managed is essential for any investor considering a long-term commitment to XRP. Looking ahead, the future of XRP appears promising, but it is not without its uncertainties. The ongoing development of blockchain technologies and the increasing integration of cryptocurrencies in traditional finance suggest a growing role for XRP. Innovations within Ripple Labs, such as enhancements to transaction protocols or new partnerships, could significantly influence XRP's adoption and utility. Watching these developments will be key for investors trying to gauge the long-term potential of their XRP holdings. The broader acceptance of digital currencies is likely to boost the value of established cryptocurrencies like XRP. However, investors must remain vigilant about factors that could sway XRP's trajectory, such as regulatory changes and competitive pressures. In conclusion, XRP presents a compelling case for long-term investment due to its unique position in the cryptocurrency market and its practical utility in financial transactions. The strategies discussed, ranging from dollar-cost averaging to timing the market and diversifying investment portfolios, provide a framework for investors to capitalize on XRP's strengths while managing the associated risks. Implementing these strategies requires a disciplined approach to investment and a deep understanding of market dynamics. By considering XRP's technological advantages, market trends, and potential risks, investors can make informed decisions that align with their financial goals. Each investor's strategy will depend on their individual circumstances and outlook. For those willing to navigate the complexities of the cryptocurrency market, XRP offers a range of opportunities for substantial long-term gains.